Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 26th of November. So we're at an interesting time. We've got non-farm payrolls coming in next Friday, and we've got Thanksgiving weekend this weekend. So we're probably going to see a little bit of quiet market action, but we have seen some really good moves this week, and the continuation of some of these big trends has been a real highlight. So we'll jump straight into the markets and see if we can identify any trades for today and early into next week. We'll start out here with the Aussie USD. We can see that we've seen that continued weakness right through from, basically it's been the last month and a half really of really solid shorting. It's been a really good bonanza of actual trading. I think that if you probably missed a bit of it, it's probably you could be forgiven if you're only trading the daily, because I can understand why there's no pullback. We only had one significant pullback to a 20, but when you go down to the smaller time frames, this is what I encourage people to do. You can really see that you've had many opportunities to actually join this trend. The one thing that was very certain and very obvious was that the Aussie was actually shorting, so there was no question about that. But sometimes people get a little bit confused as to where you should be entering to actually join that trend. Because it's all well and good to say, just join the trend, but getting a quality location is the important thing. So when you do see action like this and you see a very big free fall of what is a very strong trend, all you need to do is go down to the lower time frame, generally stick to the one just below it and see if you can identify where the pullbacks are happening. So as you can see in this 4-hour chart on the same Aussie USD, of course, you can see that the pullbacks to the 20 moving average are very prominent, and you had many opportunities to actually join that trend. So realistically, all of these touches of the 20 moving average were all key opportunities. Now, every one of them would have survived a stop loss, because the stop loss is always going to have to go above the 50. So, in real terms, you could have got probably about 6 attempts at this one, even if you missed a few. So don't be too disheartened if you ever see this happening and you think, how am I going to get involved? I don't want to jump on a moving bus. Just go down to the smaller time frame and start taking the pullbacks. That's all you need to do. When you do that, you're going to join the existing trend at a good level, and you'll be off and running. Now, what it's going to do now, look, it looks like it's starting to teeter out a little bit. It hit the 72-cent mark, which was our intention all along. So realistically, any trades, if you've been following this for a while, the trades that we were looking for are out now. But that said, it's probably going to be a bit of a consolidation now that we know that we've got non-farm payroll next week, and obviously with a public holiday this weekend, you're going to see, in the US that is, of course, you're going to see a bit of a quietening of the market. So it's probably going to be unlikely that this is going to scoot down any further with any sort of speed. So we know that this is a very strong support zone, and you have to go out a long way to understand that. So you can see here that if you draw the horizontal line at the level that it's at, you can see that you've got a lot of market action all the way through here. It was resistance for an extraordinarily long time on a weekly chart, and support. So we know that we're at a strong level here, so you're probably going to see a little bit of a consolidation and maybe a bit of a pullback to that first zone here, which is about the 73 cent. So I'd probably be trading that range. If you see a small change of trend on maybe a 1 hour or a 4 hour, maybe scalp a couple of longs. I wouldn't go any shorter than a 1 hour. I think that it will find support here. If it doesn't find support and continues falling, that would probably be a pretty tough trade to actually get into. So I'd be taking the smaller trades on this one. Look for a 4 hour change of trend or a 1 hour change of trend, just for very small scalps, and maybe trade this range here until we get some consolidation formed, and then we'll look for the new trend once it actually kicks in. And I don't think that's probably going to happen until after non-farm payroll. So I think we're in scalping mode for the next week. All right, we'll go over to the US dollar CAD. The US dollar CAD's been, basically the last few days have been a little bit weak, but it had a massive start to the week. And you can see here that we've pushed up almost to the 127, all but the 127.50. We knew we were targeting the 127, so it's already gone and hit our targets anyway. But, now it's probably doing what we really require it to do, which is a bit of a pullback. We wouldn't want it to continue on any higher, really. We've had a significant pullback. Now, the best pullback, if I wanted to actually write my script for this, I would want it to come back to the 125.80, which is this zone here. That would coincide, hopefully with a 20 moving average touch if it did it quick enough. That would be a fantastic reload zone. I'd be very excited about potentially getting in at that level, but it's got a little bit of work to do that. If it turns around and starts pushing up higher from here, it's still a pullback nonetheless, and you've got a trend line moving up there as well, and it's forming almost a very aggressive channel. But I would have a little bit more confidence if it came down a little bit further. So Yeah, although that might sound counterproductive, like, actually wanting it to come back a bit further to actually get in, it's only because the momentum can still pick up from a lower base and actually really hit that a lot harder, rather than trying to find the momentum from this point onwards. Okay, so there are a couple of things that you'll see shortly on the dollar index that make this a little bit harder to trade from this level. So ideally, in a perfect world, we'd be longing it from here. And failing that, of course, if it does a change of trend and it goes lower high, lower low sequence, then we know we've got to trade on the way down. But there's a lot of work to do before it does that, and it's got to break all the moving averages and all of these support and resistance zones. So not the preferred trade by any stretch of the imagination. All right, US dollar yen. So this has been a powerhouse as well. We've got that long-term flag pattern that we're trying to hopefully establish. What we want to see is a weekly close above this level here. So even at this level, this is fine. We don't really want it much lower, okay? So we want a close above all of this noise here. Looking very, very likely at the moment, and as long as we don't see a crazy reversal, we're very likely to get what we want here. And if it does that, it really opens itself up for a really good long move. Once the trend kicks in again, once all of the non-farm payroll and everything is out of the way, I think that we could continue on to potentially up to even 118. So what we're looking for, because that will be the flag target. But we want to see this close. It's very important that we get this big, strong weekly close. That sets the tone for next week and the week after that's trading, to see if we can actually keep it pushing. Very, very important. So let's keep an eye on that one. Anything above probably 115.20 would be ideal, but it really needs to stay well above this noise here. This level needs to be broken. This is a weekly chart. No mucking around on this one. It's very serious. So we know it's a serious level if it gets broken, and that's the key for the US dollar yen. All right, dollar index, the all-important dollar index, look very, very, very strong. No question about that. It's hit the targets again. This is one of the ones that hit the target for us, which is actually the euro target, really. We'll look at that in a second. But where it goes to from here is probably a bit of a pullback. I would think that it's going to find a fair bit of resistance at this point. Again, you got to go a long way to find it, but it's there. And when you go to a weekly chart, you can see here the 96.80 level is very, very congested. You can see it's got support all over the place. It's got support everywhere. It's got resistance everywhere. Very, very, very important zone. So more than likely, we're going to see a pullback of some description around this zone. It'd be extraordinarily unlikely that it would break up above this level and keep going without pulling back. So one to definitely watch, but just be very, very mindful that although the MACD looks strong, we know that we've got to look well past what we can currently see on a daily chart to see how important this level actually is. Dollar strength is there. There's no question about that. But we've known that for weeks, right? Like we've known that for weeks. So it's hit the level now where we're going to be very, very conscious of the fact that it's going to struggle to get past this without a significant pullback. And when I say significant, it doesn't have to come back an extraordinarily long way, but we want to probably pull back to maybe either the 20 moving average or maybe a 38.2 fib. That would be fine. I think I'd probably cop that, because then it can hit the momentum. I'm not convinced it's going to stop here, but I think it's just going to probably pause here for a little bit and consolidate. And the pullback might give us an opportunity to go long on the euro. So let's have a look at the euro now. Obviously, big sell-off, no question about that. Replicating what the dollar index is doing, of course. But again, it finds itself, you go out a long way and you're going to find a very, very strong level here at this point. Okay, so you can see that there. Extraordinarily strong. Again, this is a weekly chart. Very, very important that you respect that. Support everywhere, resistance everywhere, and these are for weeks at a time. You're talking about months and months of support and resistance at this zone. So again, just because the MACD looks like it's really, really aggressive and probably going further, you've got to take note that this is at a very, very strong level. So it may break it initially, but the 112 was the target anyway. So if you were shorting it, we should already be out. Realistically, though, we're probably looking for a change of trend to counter it back up to a 20 moving average. Very similar to the dollar index in reverse, of course. We're looking to get a bit of a pause of the market. So we know we're going into a very quiet week traditionally. So we're probably going to look for a little bit of, just a little bit of dollar weakness coming into the non-farm payrolls after Thanksgiving. and we'll see maybe a little bit of resurgence on this one. If you're going to scalp it, you know, I wouldn't recommend probably going down any further than probably the 1 hour at the very, very least, right? You want to be very, very careful with this one, because it is, yeah, it does worry me a little bit that it's fallen here so quickly. So I'm not going to be that keen to jump in on the counter trend, make no mistake. But if you get a 4 hour change of trend, which wouldn't take a lot of candle action even from here, because you can see here, if it paused around this level, it's already broken here. If we get a close above the moving average, we're going to have our lightning bolt on the 4 hour, which is a significant enough time frame. And then we can start looking for, you know, pullbacks maybe to, you know, up to around that maybe 113, 113.50 at a stretch. Give the 20 moving average a chance to come down. That would give us a very, very good reload zone to continue on with the short. But yeah, failing that, of course, if it gets above these moving averages, then we start looking to the 114, 115. But that's not the likely trade at the moment, not with so much dollar strength. But again, we've got to keep our minds open, of course. So counter trending, though, is probably okay on this one at this level, knowing that we've got a slow week ahead of us, because that's quite often what happens. We're going to get that consolidation, and that gives us some good opportunities to actually get in and take some small trades. But you're only talking, you know, 50 to 80 pips at most on these key ones like the Aussie USD and the Euro USD. You're not going to get a hell of a lot more movement than that. So just be very, very mindful of that. That consolidation doesn't equal big moves. All right, Aussie 200, stuck in this zone. We're still well and truly inside it. There's no question about that. The 73.50 area and 74.80 is proving to be a bonanza of consolidation for the Aussie 200. I don't think that's going to be changing anytime soon, especially this week. But it does give you some opportunities to, you know, trade off each base and each level. So realistically, we're right in the middle of nowhere at the moment. That's the moving averages are starting to go horizontal again, so we know we're getting the ribbon effect. So realistically, you know, it's hard to trade this as a scalp from the middle because, yeah, there's not enough movement. But certainly from the top or from the bottom, I think you can probably place a trade. So what you're looking for here is, you know, a move up to around that 74.80 level. If we get that, then I'd be looking for shorting opportunities until it actually broke through. Unless it gets a daily break above that level, I'm not going to be convinced this is going long. I think we can be stuck in this zone for quite some time. I don't mind it doing this. I think it's a good consolidation level for, and probably a good reflection of where we're at as an economy anyway in Australia. So hovering in this level here is fine with me, and you want to trade it accordingly. So you got very clear targets. You got your take profits up here. You got your stop losses down here if you're going long, and of course, accordingly, if you're going to go short, you've got your take profit and stop losses set as well. Trade within this band until it tells us otherwise. Until we get a daily close below the 73.50 or above the 74.80, we're just going to trade this zone. But don't let that, you know, convince you that there's not good trading there. You will get some good opportunities. If you go to the smaller time frames, you will see that once it breaks out of these little mini zones, it's right in the middle. At the moment, it's doing nothing, right? So hard to trade it now. But if you get a change of trend in the middle here and a series of higher high and higher lows on a 1 hour, or lower high and lower lows on a 1 hour, your targets are very clearly set. And I'm not biased either way. I'm happy for it to go either way. And I would trade both of them with enough confidence if we get that lightning bolt on the 1 hour. All right, the last one we'll have a look at today is the SpotCrude. Okay, so this one's an interesting one because it's kind of in the middle of nowhere as well, but it's setting up for two potential trades that could easily play out, and I'd be quite confident in both of them. So you can see it's pulled back to the exact level that we would have wanted it to, which is the role reversal zone, support becoming resistance and resistance becoming support, as we know. So this was the resistance that we're talking about. Now we've got the support. We've already had that bounce. It's finding itself trapped between the two moving averages now, which is the 50 and the 20 moving average. What I like about this trade is it can go either way very, very quickly, and I'd be comfortable with both. What we're looking for is a series of higher highs and higher lows on a daily. I wouldn't be taking anything short of that because I think this is an important move either way. If it breaks this level down past the 76, it's probably got 72 well and truly in its sights, and failing that, if it makes a new high, then it's got a lightning bolt on the way up, and then it's going to probably test the highs of above the 82. So we've got about $3 or $4 of potential profit either side, and I haven't got any bias to either of them. I think both of them can play out quite nicely. So what you're looking for is, you know, again, if we get a daily break below this level here, below the 76.60 area, then we've got a confirmed lightning bolt to the downside. And if it does that, I'd be targeting the 72 in the first instance with a pretty tight stop loss just above the level where we're at here, above this moving average and above this high. and that makes for pretty good trading. That will be a significant break, make no mistake. And if it does close above the moving averages and clears this level here, which is around that 80 zone, then it opens itself up to the 83, which is retesting these highs up here. I know it went higher than that, but I'd be probably aiming for the 83 and 84 in the first instance, which is a lightning bolt up, and that's another $2 or $3 potential profit. So it's got really good trading on both sides of it. It just needs to do one of those two things. Once it does that, we can jump on board that train. All right, so I hope everyone's had a great week's trading. I think we've had really good opportunities again. Hopefully you were able to take part in some of them. It's going to be relatively probably slow week unless we see extraordinary events happen before non-farm payroll, so probably not likely. Look for the consolidation trades, and hopefully we'll be able to get some good action after that once non-farm payrolls happens and is out of the way. Have a great weekend, everyone. I look forward to seeing you all next week.